Okay, we're going to pick up where we pretty much left off in the chat room, which was a continuation breakout trade here on the dollar yen. Go to this page here. Give it just a moment to load. So we had a continuation breakout trade here. It's a bit choppy, and the indicators weren't really giving me the confirmation that I needed on that signal candle. So I was going to avoid selling it anyway, even if it gave me the 3-pip entry. Now, I talked about the 3-pip entry. The 3-pip entry keeps me out of trouble if this turns out to be some kind of a head fake. So I'm no longer considering going short, even if it dips down here again. It is just pretty sloppy in here. I mean, there's another level of support right here from last week that's pretty significant, and that's sitting right around the 50 area. So the first target would have been 50 anyway. This is 57. It's gonna even if it comes down to 70, which was the 3-pip entry, I think it's just going to bounce around this range and come back up anyway. I'd prefer to not see it even do that, but I'm not going to be selling it here. I still think that the move here on the dollar yen is to the upside, and I'm going to show you a few reasons why I think that. I could be wrong, and I would change my opinion with one candle on the daily time frame or several candles on the 4-hour chart. I'm not, stuck to one particular decision or another when I have confirmation of something else staring me right in the face. I'm going to open up and take a look at that information and try to analyze it and determine, am I wrong, or am I going in the right direction, or maybe I don't have a decision at all and I need more information and more confirmation. I need more movement to really solidify a decision in either direction. But I'm going to show you a few things that I have been watching over the last few hours that could affect the dollar yen. So again, the dollar yen, as of last week, I mean, we're looking at this little up move, this move to the upside here, and then I think I showed you in the chat room, we talked about the daily time frame here, and on the daily time frame for the dollar yen, I'm going to tighten up the charts here so you can see it. This is a weekly chart. This is a weekly chart. Very often I'll go straight to the daily or the 4-hour chart, but now we're looking at a weekly chart, and last week printed another bullish engulfing candle, or not, I'm sorry, not an engulfing candle, but it closed more than 60% of the length of that last bearish candle. Something that I would like to see if I was thinking that this support level was going to hold. The other thing to note here is that is, I moved that around, I'm sorry about that. That low right there on the weekly chart, this is from the week of March 18th, 2018. And then price in the last couple of weeks here has found support and bounced and pulled away from it. So the week before last, you can see that price clearly moved through that support. This is something that I like to see. And I mentioned this. This is just my personal preference. I would rather trade a bounce off of support when it goes through support and then turns around and comes back up, which this did two weeks ago, as opposed to trading something like this. This, see if I can get it right there. I'm trying to get it to that white candle there. You'll notice that it falls short of hitting that actual support level. And, it could work. It sometimes works. But I feel much more comfortable when I see price move through support and then turn around and come back up. And then you'll notice where some of these candles are holding, at the lower Bollinger Band. I'm thinking that that we're likely to see some kind of another retest or pullback. And at one point this morning, it looked bullish, a white candle, and then it dropped back down again. And that sort of all lines up with what we saw today on the and the last couple of days since the market opened. So again, it started to go bullish, and then it dropped down, went bearish, popped back up again, and came back down again, that kind of thing. So again, no continuation breakout trade to the downside on the dollar yen. So then, going back to, again, this weekly chart, that was a pretty significant move in my opinion. I just need more confirmation. This would be something like a Tech 1 trade if I was, the structure is the same even if this was a 1-hour time frame. So I want to be paying attention to what happens here this week. Now if I go to a monthly chart, not a whole lot of information here, but I could easily see, the way price is moving here, that we could have 1 month bullish, right? I mean, it's going to wave, it's going to move in this ABC price swing structure, and it wouldn't surprise me to see some kind of a bullish move eventually. That's not all here. This is the monthly chart. The weekly chart is pretty important to me. The daily chart is also sort of confirming. This is a daily chart now. We have a range of consolidation in here, and this is starting to make some sense, right? We've got a support low from the beginning of the month. That was August, I believe, the beginning of August, or August 12th, right about there. And then here's a range of consolidation. So if a daily candle closes above resistance, I would expect maybe a continuation breakout trade. So again, all of this is what I'm trying to identify as a potential support low and the possibility of price moving back up a little bit. It could go anywhere between where it is now and the 109.20 area, that high. Again, this is the daily time frame. So I'm trying to figure out, what is it likely to do? Is it, are we looking at a support low, consolidation range, maybe a continuation breakout trade? Is that weekly chart, that candle significant? Does it really mean anything? So again, to the upside is what it looks like at the moment. It's what it looks like at the moment. Again, I'm going to go back to the weekly time frame, and this is what I'm looking at, a bounce off of that weekly support low from March of 2018. I don't know if it's going to hold, but it looks like it could temporarily. All I'm looking for is temporarily. I'm not expecting price to go all the way back up and take out the highs 2016. That's not what I'm looking at. So again, temporarily, I'm trying to figure out where to go, where to trade it. It looks a bit choppy on the 1 hour time frame. I want to pick the right direction. So again, the possibility of the dollar yen moving higher. Now, let's go to the Japanese yen futures. This is my Japanese yen futures chart over here on the left. I'm going to expand the chart, open it up here, and this is the daily time frame. Now, we have a move here from December, and it rallied and stopped right there in January. And you remember what happened January, the first day of trading. You can see it on the daily chart for the dollar yen, and you can see it here on the yen futures. Everything drops, right, and comes back down all through March. Now we approach and we come back up here, take out the highs, but it's looking a bit choppy, right? It's not really providing that continuation breakout trade. I'm trying to figure out if this looks like a top here. Some people like double tops. Some people, like me, look for 3 pushes to a high, which also incorporates the double top, but it gives me a lot more confirmation, and I can, with the 3 pushes to a high, I am looking at, I'm using the Bollinger Bands, the way John Bollinger is using the bands to identify tops and bottoms. And it's the way that I use it, right? Everybody uses things in a slightly different way. This doesn't necessarily mean that this is the only way. But I see 3 pushes to a high. You can see the 3rd push right there on that oval, the 2nd, and then the first one here. And you'll notice that how these initial pushes here exceed the upper band, and then they start to close a little bit closer to the inside of the band. Momentum's slowing down here. And you can see it here with the volume indicator as well. This is one of the other reasons why I really like trading Japanese yen futures and the dollar yen at the same time, because I get a lot of depth here as far as confirmation, and to see the strength of these moves and where things are starting to slow down. And then the last move here, you can see that it spiked up and then dropped right back down with a lot of volume. That's a lot of momentum, that's a lot of volume back down as it sells off. And it stays within the upper band. I like seeing that. I like that. Now I also want to look for consolidation ranges. Again, this is the daily chart for the dollar yen. So if this looks like a potential bearish setup, and this chart and price is going to start dropping lower, this would be yen weakness, which would support what I see here, which would be yen weakness. Here's the weekly chart for the dollar yen, and if price moves higher, that's yen weakness. And price is bouncing here, at least at the moment, at this support low. So I wanted to point that out to you. It might be something that we could carry forward into the trading sessions inside of the chat room, where we're looking for opportunities on, let's say, the 1 hour time frame or the 30-minute chart. Here's the 1 hour chart. It's a bit choppy. I would compress everything and strip everything out, right? There's a lot of movement in here. The easiest way is to really compress everything or go to a larger time frame. So we've got this range that's tested several different times through here, right around the 106.73. It's not the overall high, but it is a resistance level that has been tested multiple times over the last couple of weeks. So I like that level, at least initially. And it's also a high from a couple of weeks ago. And that move here with the FOMC, the Powell statement from Jackson Hole, and then the all that talk about tariffs and everything hitting at the same time in China, the trade war. So that's what really set up that move. But you can see here, again, solidifying that resistance level in here. So I would go with that high right now. And if a 1 hour candle, this is a 1 hour chart now of the dollar yen, if a 1 hour candle closes above that resistance, maybe we would see a continuation breakout trade. I couldn't find, and I wouldn't use and I'm going to put my crosshairs in here. You can't use a continuation breakout trade and say, if it breaks above this range here, maybe. If it breaks above this high, maybe. And if it breaks above this high, maybe. It's got to be the actual resistance level, and it's got to be a true clean breakout on the 1 hour time frame above resistance. A clear resistance point that has been touched multiple times. This is solidified, in my opinion, this resistance level. Multiple times over the past few weeks, it's ran into this resistance and held. This is a pretty significant high and a low, and this is my overall range of consolidation. Now, if my opinion would change, of course, if I go to the 4 hour chart or the daily time frame or the weekly time frame, and things start to look bearish here, and then the Japanese yen futures starts to look bullish and starts to move back up. That's a possibility for the week. That's still a possibility. Even though the Japanese yen futures are showing me the possibility of yen weakness, this is a daily time frame. This could take a week or two before it's done with some kind of a retracement that really doesn't take out any of these highs, and then it could turn around and still come back down again. So there's several things that we need to take into consideration. What does it look like on the 1 hour chart? Does it look really choppy? Does it look confusing? If so, I'm probably going to stay away from it. It's not that clear. You can see what's going on here with these candles. It's getting choppier and choppier. Got to be careful. The more choppy it gets, the more careful we got to be, the more we've got to protect, and possibly even let some of these trades go on without us, unless it's going to be maybe something with economic data, 30-minute, 1 hour candle setup, something like that with a Tech 1 trade. We talk about that in the chat room. I don't know if I'm going to get those, but again, if things look bullish here on the yen, then maybe I would get an opportunity. But again, what I'm saying is this could take some time before we see some severe Japanese yen weakness. This is a daily time frame. This could move around for a couple of days around inside of a range like this and not change the overall pattern that I see here. And then eventually close below that support low. I would be looking for a daily candle with volume, strength, if it's going to close to the downside, below that low to print the continuation breakout signal candle on the daily time frame. And then at that point, I would expect the trend to continue. Minus, the retracement, that kind of thing, but I would expect it to continue. And it'll all show up here on the 1 hour chart or the 4 hour chart on the dollar yen. So it's something to consider. There's, I was talking about this weekly chart in the chat room, and I just keep looking at it. It's kind of interesting. I don't want to be over analyzing it. I'm just going to leave it alone at this point. It is stuck in a range of consolidation on the daily time frame, which we could see, which supports exactly the candles that I'm looking at here on the weekly chart. It all supports. Everything seems to be lining in or lining up correctly, according to all of the information that I'm gathering and the confirmation that I see and the clues and the signals that I see on the Japanese yen chart. All of this seems to be lining up. But again, I just want you to know that I'll change my mind if price drops back down here and things start to reverse. Even going to the 1 hour chart. 1 hour chart, what would be a possibility? Maybe a candle, a 1 hour candle that closes below that support low. Initially, we were looking at this low this morning. That was this week's low. But now this week's low has changed. And now this one becomes the most obvious support low, not this one. If a candle closes below that low, this week's low, but not last week's low, this pullback low right here, I would avoid it altogether. It would probably come down to about the 58 and then bounce or something like that, maybe a little bit lower and then turn around. I would still be suspicious of a continuation breakout trade. But if a 1 hour chart, if a 1 hour candle on this 1 hour chart closes below this support low, let me get that number exactly right there. That is 58, so it is sitting there right at support. Maybe it would print that continuation sell signal candle. Possibly. It might give us an opportunity to trade that. Again, we would scale out at the first 20, that kind of thing. And it might be that the dollar yen, it might be that choppy. It might print a continuation breakout trade that looks good, and we only get 20 pips out of it, not 55, because it only goes to the first 20 pip target, and then it turns around and goes back up again. It could be choppy. You know, we're looking at the daily time frame. It's choppy. This looks pretty choppy. So, again, be really careful with it. At this point, from what I see on the daily time frame, the weekly time frame, and what I see here in the Japanese yen futures, it looks like it's starting to set up some bearish yen weakness. But again, I won't have 100% confirmation until a daily candle closes below that low right there, and that was from August 13th. That low right there on the Japanese yen futures. And you can see the setup, 3 pushes to a high, at least at this point. Again, if it bounces and takes out the high, I'm willing to trade it in that direction too. Doesn't matter to me. It's just what I see at this point. And then, of course, volume. I like these volume levels. I like looking at volume. I like seeing this with these reversal patterns. I need it. You know, you can't see it as well with the just looking at the MetaTrader platform. So that is the dollar yen. I'm going to go over to the daily charts and take a look at some of these. This is the euro dollar daily. I haven't worked on this particular computer in a little while, as it looks pretty obvious. Let's try to gain some perspective here. So there's a hammer that printed this morning. Throughout the day, it dropped down and turned around and came right back up again. It jumped on some economic data. We were sitting in the chat room, and I thought at one point it didn't look like it was going to go very far, and it jumped on some economic data right at 10 o'clock New York time. So it printed this hammer. Again, I don't particularly care to trade off of a one candle pattern like a hammer. Some people do, and it works just fine for them. And other times, hammers will set up in the middle of a downtrend, and they collapse. They don't necessarily work. So you got to be careful with it. Sometimes they work and sometimes they don't. But I need at least 2 candles, a pattern, and maybe even 2 to the right and 2 to the left to confirm that this is actually a low. Price may move around in a little bit of a range of consolidation here on the 1 hour chart. I'm not really too sure. At one point, let's go to... so the pound dollar did, for the most part, the same thing. Nothing really too significant is showing up here. There's a bearish engulfing candle here on the dollar Swiss, which looks really nice. But again, stuck in this little range of consolidation. We could expect maybe some kind of a pullback or maybe another bullish day halfway through, something like that, the length of the previous candle. So I'm going to go to the 1 hour charts now. And then we talked about the bullish hammer move here on the euro dollar. So in the chat room, in order for me to trade and be convinced that support low on the euro dollar is going to hold at this point, I need to find consolidation, right? I want to trade that continuation breakout trade. It's going to be the most reliable setup for me. The reason that I look at it like that, one of the reasons is when price is inside a consolidation without really any clear direction for a while, it's usually because of the market's anticipation of something, right? Whether it's economic data, political comments, statements, bank information, statements from bank officials, whatever it is. And the consolidation range sets up and holds throughout that consolidation that period that it's in, that length of time that the market's waiting for this information. And then when the information has been delivered to everybody, and everybody can take a look at this information and figure out what it is, whether it's non-farm payrolls, an election, a vote, something, whatever it is, we have a definite decision on that issue, and that issue is the catalyst. That's what creates that movement in the breakout of consolidation. So the key is to identify the right range of consolidation. One of the so consolidation is pretty subjective to for a lot of people, right? They'll pick maybe a high here, or they'll pick this high for consolidation, or they'll pick this high. There's too many different levels that people would use to identify this range of consolidation. And what I find is just the simplest way, and it's usually the right way. Not that my way is the only way and the only right way, but what I'm saying is for the way I trade it and the signal that I'm looking for, this is the right way for me. I use the week's high and the week's low. And we're into the week already almost 3 days now. This is a pretty solidified range of consolidation, the week's high and the week's low. Sometimes it doesn't look that clear with the week's high and the week's low. Sometimes it looks a bit choppy. Other times the ranges are smaller. Whatever it is, I need to look at if I've got nothing else to work with and I've got multiple highs in here and it's hard to figure out. Well, the easiest way is to go straight for the week's high and the week's low. They are significant. They do have an impact, and they do help support creating a range of consolidation like this when it's all I've got. I'm going to make this little adjustment right down here, pull it down just a tick. I don't even know if that worked. It doesn't really matter. It's fine the way it is. So if a 1 hour candle closes outside of this range with strength and all of these indicators confirm, I might get an opportunity to trade it. And if that hammer on the daily time frame holds, it may print a continuation breakout trade here to the upside. Now, I may not trade it straight into that resistance. So the next question, and I get this quite a bit, well, if you know that you're looking for a continuation breakout trade and you're actually thinking maybe it'll close above this resistance, then why don't you just trade it right now to resistance and then wait for the close completed candle and trade it even further? And I don't think that's the right way to go, because one of the things is, even though I see some bullish moves and bullish candles in here, there's not a whole lot of momentum right now, first of all, and I don't want to sit here and watch this thing for 8 or 9, 10 hours until we get into the London session or maybe even the New York session before we see some kind of a bigger move. I'd rather wait just for the breakout. And usually with the breakout, if it happens with some news, it's more likely to reach its target in a shorter period of time than getting in now and hoping for the best. To me, this is a riskier trade. To me, I don't have confirmation that it's even going to break out and trend higher. And that's what I wait for. I'm all about confirmation, and I'll wait as long as it takes. And when I wait as long as it takes and I wait for the confirmation, I'm always going to get a breakout. I just don't get a breakout every day. I have to wait for the breakout. And when the breakout occurs, it's going to happen because of that particular event that the market's waiting for. And I'm going to be able to earn anywhere from 20 to 55 pips. 20 pips in this particular market, yeah, scaling out, we've got to do that. In a normal market environment where the market's reacting to news and it's easy, relatively easy, and it's trending for the day, 55 pips is the target. And the trade works. I say it like it's easy and I say it like it's no big deal. And it usually isn't when you're in a trade and you wait for the right levels to be broken and you can identify why it's breaking and with the news, all of that. All of that supports everything that we see. So again, with that hammer, I'm not convinced. And the thing that would convince me or help me consider trading it higher would be the continuation breakout trade setup here on the 1 hour chart, euro dollar. I don't know when that's going to happen. That could happen on Wednesday. That could happen on Tuesday, Thursday or Friday. Or it could possibly not happen at all this week, and it could stay inside of this range until the following week. We've seen that happen, God, weeks after weeks, weeks in a row since the middle of July. Lots of consolidation. I mean, days and days and days of consolidation with very, very few trades. It's been frustrating for me. I've had less than half of the normal trading opportunities. But there's nothing I can do about it. And the market does this every once in a while in cycles. It's for obvious reasons. Nothing to worry about. It's going to give me those opportunities where, in the near future, I'm going to get 2 or 3 continuation breakout trades on one pair in 1 week, and all of them are going to hit that 55 pip take profit level, and chances are it'll set up on 2 or 3 other currency pairs at the same time. We're going to make 500, 600, 800 pips, 900 pips in a week, and then other weeks we're going to make 100 and 10 or 170 pips. It really depends on how many opportunities the market's giving me, and you can clearly see it. So when I get questions, sometimes they'll say, well, you're just not trading that much, and then I think, are you looking at the charts? Like, are you looking at the same thing I'm looking at? And it could be, the time frame that they're looking at. Maybe they're looking at a really small 5-minute. Maybe they're used to something like that, and they're not used to the way I trade it. So I think it's really important for me to really let you understand my thinking behind all this. Again, this isn't the only way to trade. This is just the way that I trade. And it's the only thing I can share with you, right? This is the way I do it. It works for me when I wait for these setups. When I wait for these setups and I'm patient, I win. When I start jumping in and out because I'm anxious or bored and I want a trade and I'm just taking something that's a little more risky, chances are I might lose on the trade. To me, this would be a risky trade. Yes, I know that it's likely to go somewhere. It's got to go either to resistance or support, but I'm not going to pick and choose right here. It could be days. The other thing that I need to take into consideration if I was to jump in here, where's my stop? Where would I take profits? Where would I lock in profits? What if it approaches resistance but doesn't clear or close above resistance and pulls back down? You know, am I going to take, what's the difference here? 70 to 90, 70, 30 pips, and then 70 to a low down here at 25, 50 pip stop or lower, 65 pip stop for 30 pips. Where would I put my stop? If I put it in here, it's in the middle of this consolidation range. If I put it just below that low at, let's say, 64, it could easily drop right down at the London Open and then turn around and go right back up again. This is a really tight range. I'll just wait. It's better for me to wait. And I know it's frustrating. When you've got bills and you've got money and you're down a lot of money, it's frustrating when you're looking at that. You got money to earn back and you got money that you need to send home to take care of the family, to pay the bills if you're trying to live off of your trading. So it's frustrating, but it doesn't mean take risky trades. It just doesn't. That's not the way to go. The other issue is, though, inside of the chat room, we're scaling out. We're scaling out to protect our profits. So there really isn't any losing trades in the chat room when we see a continuation breakout trade and it doesn't hit the 55 pip take profit level, but we scale out at the first 20. At least we lock in that 20, and it may not hit the 50, which is the final take profit on the trade, but scaling out protects us in this type of market. These are the conditions that create these short, quick moves and then these quick reversals. And it's not going as far as its normal, typical trading average range. And that's the issue here. And it's designed and it's sort of set up like that, this price structure, to test you that way. Because very often when you see certain candle patterns, you get into them, but they don't go as far as you expected them to or as far as they used to. And then you get the sharp reversals and moves and reactions with tweets and comments anyway. And that also throws another wrench into this whole equation, and it makes it harder. You got to be really careful. You got to be quick. So I'm waiting for price to break out of this consolidation range. Pound dollar. I'm not really prepared to do anything with the pound dollar other than to look at the larger time frames. And that's it. This was obviously a setup that occurred when it crashed through the 2000. Everybody was watching that. Crashed through the 2000 level, and then almost immediately there was all of those. We talked about it this morning in the chat room. So if you weren't in the chat room, I'm always looking at statements and comments, and I analyze it in a couple of different ways and think about it in a few different ways, which is, was this a prepared statement that people were holding on to and they were waiting for a specific price level to be breached, and then they hit the market with these comments, which is what it appeared to happen. That's what appeared to happen this morning. And then, of course, there's some follow-ups, right? There's some immediate comments that support it, but it was almost like a wave of headline news regarding Brexit, right? And it was designed to just throw the price and reverse the opposite direction and then hold it there. And then now we're waiting for the next wave. Well, we've heard what's happened with Boris Johnson. That didn't really create anything. I think a lot of people were anticipating some kind of a movement there. And we're waiting for the next one. And then we wait for the next one. And we wait for the next one. Right now, again, I'm not considering anything other than looking at a 4-hour or daily chart for the pound dollar. And as I mentioned with the pound dollar, it looked like it printed a hammer there as well. So at this point, I need to find consolidation. I've got this week's high all the way back up here. That might give me an opportunity. It's not that far away from where price is. 2175, and it's sitting here at about the 21 level, the 2100 level. Maybe. I mean, it's going to take a little while, and it's 75 pips distance, but it would be safe. I don't know. I really don't know. I don't even know if I would sell it even to a short, psychological level down here. Possibly. Maybe with some economic data today. I'm really not sure what to do with this one at this point. Again, aside from looking at the 4-hour chart, everything it looked like a T2 pattern is what I mentioned today. And then here's the daily time frame with that hammer. And you can see here with that support low, it's holding at this point. It's holding. But we know what is going on with Brexit, and we know that there's a strong possibility that this thing's going to drop back down and take out the lows. It could, is what I'm saying, and it could quickly. So we are trading against the trend here, and I need more. I need more before just jumping in. Sometimes you do okay when you just jump in and you put on, which was down here. Sometimes you do okay, but you've got to know where to take profits. You can't hold on to it indefinitely. You got to figure out where your profits are and where your stop loss is. And at this point, I'm really not too sure what to do with it. So I'm probably going to have to wait until we open up in the chat room to start looking at opportunities here that might develop on Wednesday. So I covered the euro dollar. We covered euro dollar consolidation. We covered the pound dollar just now here. And then the dollar yen, what I was seeing here with the dollar yen. Again, no continuation breakout trade if it comes down to the 105.70. If you were in the chat room this morning with me, you remember that was a 3-pip entry. And if it comes back down, it is not a continuation breakout trade at this point. This is the new low, and that's the actual low that I'm watching for a possible breakdown to the downside. It's just the way I'm going to trade it. Again, looking at the possibility, and again, I know sometimes people will ask me, well, if you know that it's got to break out of this range, why don't you just pick a side right now and you'll make more money? But to me, that's risky. If it does drop and forms a bearish candle, maybe it can go a few more pips and turn around and go back up for the next 2 or 3 days. And I'm holding onto a trade, and I've got my capital locked into a position like this that I don't need to, for 24 hours. I don't need that. I don't want to trade it that way. So again, the other option or the other possibility here is that price could remain inside of this consolidation right into the close on Friday. It's just a possibility. We've got to, accept that and prepare for it, which is going to give me fewer trading opportunities. Dollar Swiss was interesting, formed a bearish candle. This range right here, 28 and 86 or 70. So sorry, about 90 to 30. It's okay, right? But it's not the appropriate range of consolidation. Needs to be bigger. So now I go with this week's high. Again, 30 to let's just say approximately 90. That's just too small. This here at 50 to 30 or 55 approximately to 30, we're looking at 80 pips, 75 pips, 70 pips. That's good. That's a good range of consolidation. And this low right here, we have a confirmed low. We're looking at a 1-hour chart. There's 2 to the left, 2 to the right that confirm this low. Now, if price spikes down but doesn't close below that low, I'm going to have to make an adjustment again to that support level. But if this is going to start dropping lower, eventually it may print some kind of a continuation breakout trade. It's a possibility. I don't know if I'll trade it. I've been saying all week and last week that I think this is going to be one of the slower moving currency pairs out of the 4 majors that we trade. And if it's a slower moving currency pair and there's just not a whole lot going on, not a whole lot of participation with this one because everybody's trying to trade maybe the dollar yen, the pound dollar with some Brexit and some euro dollar news, if that's what they're looking at and they're avoiding this one for the most part and there's just not a lot of participation, then again I have to ask myself, do I want to tie up capital on a trade that looks good but is likely to take 12 to 24 hours before it even approaches a target that is only, let's say, 20 to 50 pips? Why bother? It's that time value of money scenario where you really got to think about it. You're going to tie up your available capital on a trade like this when there could be a faster moving opportunity like the pound dollar today where it moved and jumped. The euro dollar did the same thing, and you're in and out maybe in an hour or 2 or 3. That's a better scenario in my opinion, and a better the length of time that you're in the market. Well, if we can reduce that, then we also minimize the possibility and the impact of tweets, comments, 180-degree reversals that can go straight up or straight down opposite our direction that we're trading in, stop us out like 30, 40 pips, and then go back to the expected take profit level anyway. Like, that's really frustrating. I want to avoid that. I want to stay out of that. So if I can get in and out of the trades in a few hours and pick a currency pair that looks like it's going to be faster moving with data, information, more volume, whatever it is that I can source to confirm that. And sometimes you can't confirm it. Sometimes it isn't. It's not available. You can't see it. But again, if I can figure that out, again, use that to your advantage. Think about it. Like if there's going to be a slower, this is less susceptible to a lot of the choppiness that we see anyway on some of the other currency pairs. But again, it's still likely to be, so in that regard, it's probably safer, but it's still likely to be a slower moving trade. And I don't want to be in the market for 12 to 24 hours holding onto a trade because there's just too many opportunities for something to go wrong. I was saying last week and the week before, it seemed a bit quiet with the tweets compared to what it was in July and August earlier, that kind of thing at the beginning. There were weeks where it was really active and the market was reacting sharply to tweets. And I said, it kind of feels like we're due for another round of that. And it's been pretty busy this week. It's been pretty interesting, especially watching Donald Trump's tweets. So I may avoid a continuation breakout trade unless it looks pretty serious and solid here on the dollar Swiss. So I may not be trading the dollar Swiss this week. Okay, so one more time, let's go through it. Euro dollar, this is my consolidation range. I don't want to pick sides at this point. I'd rather wait for a candle to close above that resistance. I'll be putting in a alert here and a price alert here. And then the pound dollar, not too sure what to do with pound dollar just yet. I'm going to leave it alone for a little while here. Dollar yen, here's a support low. And you remember what I showed you here on the daily time frame for the Japanese yen futures. We'll have to come back to this each day and see if this this daily time frame prints some kind of a pattern that will confirm some kind of a direction, or if we're still going to experience more consolidation on the dollar yen and the yen here overall. So we'll be aware of and paying attention to that each day. Again, this is the daily time frame. For those of you, again, that aren't too sure about how to set up your charts with the Japanese yen futures, you can do this. You can find Japanese yen futures with TradingView. So I have my charts on this page. I have Japanese yen futures here on the left, dollar yen on the right, and I trade them at the same time. So this is obviously the daily chart. This is the 1 hour chart. When I'm trading the dollar yen, I'm going to switch to a 1 hour chart to try to get my confirmation. It gives me perfect confirmation. I look for the same setups here. The only difference is, or the major difference I should say, is that I get true volume levels here that confirm, just like I was showing you here with this daily candle. Again, that daily candle, that was on the 26th of August there. A lot of volume in there. A lot of volume, and I like to see that when it's pulling away, and you can see how it's moving around the Bollinger Bands. All of that's really supporting this move here. So we'll see what happens, though. We'll keep an eye on this one. Again, back in the chat room, 7 o'clock New York time, and then remember, September 16th, we start at 3 a.m., so we're actually going to be 10 hours in the chat room. It includes the London session. So we're going to get more trading opportunities that set up during the London session as well. And I call out all those trades in the chat room.